Welcome everyone, and thank you for joining us on our Nordics webinar to launch our Deloitte's Financial Markets Regulatory Survey Outlook for 2021. This is our annual flagship publication, which is produced by Deloitte's Centre for Regulatory Strategy. The report looks at a range of themes and topics that we think will be top of regulators' minds in 2021. We will share a link to the report after this webinar so that you can all read it at your leisure. My name is Tom Clifford. I'm based here in Denmark and I lead our financial risk management practice for the Nordics. And I'm joined today by a fantastic panel to join and discuss some of those themes which we hope you will find very interesting. We have Elizabeth Verneman, who leads our financial risk advisory services practice for the Nordics. She's based in Stockholm and her work spans a range of issues which are very topical for financial services firms today, including regulatory, technical advisory and transformation. We also have Sverre Danielsson, who's based in Norway and leads financial services in the Nordics. He's got an extensive experience and is always talking to the leaders from the industry. We've also got Hinko van Beek, who's recently moved to the Danish practice and is one of our senior Nordic and European banking experts. He's worked with banking and insurance firms across the region, and we're really looking forward to having him here in Copenhagen. Then we also have Gareth Greenwood, who's our Nordic non-financial risk management leader. He supports our clients on a range of topics and has multiple years experience both working in industry and also working here in Deloitte. And then we also have Carla, who's based in Finland. Carla is our FS risk advisory leader in Finland and has worked on also a number of the important topics such as financial crime and some of the data transformation projects. And he really will add an extra angle in terms of digitization. Before we start, just a few housekeeping points. You can submit your questions through the Q&A function. Please do. I really look forward to posting those to the panelists. And this discussion will be recorded, so you don't have to take notes. You can go back and revisit it later. And you can access it via the Deloitte website as long as the details of our outlook. So enough of me. Before we move on to our panelists, I'd like to introduce you to Simon Brennan. Simon is a director in our Centre for Regulatory Strategy and is responsible for the Nordics. Hi Simon, are you there?
Hi Tom, yeah. Good morning.
Very good. Welcome, thank you for joining us. So I'm going to hand over to Simon now, and he's going to give us a quick 10-minute overview of the regulatory outlook. Simon, over to you.
Thanks, Tom, and good morning, everyone. So as Tom mentioned, we publish our regulatory outlook each year, giving our views on the trends and specific regulatory themes, which we expect to shape financial services in the year ahead. The title of this year's report is Recover, Renew, Rebuild. And in our report, we identify 9 cross-sector themes, all of which affect banking and capital markets, insurance and investment management in some shape or form. We also identify several additional themes specific to one of the sectors. There are certainly a number of different issues to consider and reflect on. But today, however, I want to focus my remarks on 3 perspectives that I take from these issues. The perspectives are responding to COVID-19, addressing the expectations of society, and dealing with technological innovation. I think it's really notable after several years where the regulatory agenda is focused on the detail of rebuilding the regulatory framework following the financial crisis. Now we see regulators working on a set of issues that very immediately address some of the key societal issues that politicians and legislators are dealing with. So if we move to the first of these, responding to COVID-19, the immediate priority for supervisors in 2021 will be financial resilience and ensuring that banks adequately manage the expected rise in credit impairments. Just as an example, the focus in Denmark on capital at risk due to COVID-19 is one way in which this kind of forward-looking risk is being managed. But of course, we won't know the full extent of losses although losses will become clearer in 2021, we won't know the full extent until later. This is partly because lockdowns are continuing with the associated economic effects. It's partly because continuing government schemes to some degree make it more difficult to discern the underlying economic situation and credit quality. And it's partly because the default and recovery process, which will define or determine the actual losses, will extend beyond 2021. So supervisors are kind of following a moving target, as are firms themselves. Credit is clearly a very significant issue for banks, but it's also highly relevant for non-bank lenders and some insurers and asset managers. And this might be a topic that we come to in the discussion shortly. What we will definitely see in 2021, though, is an increase in the structural profitability challenges that all FS firms were facing before COVID-19. So COVID-19 has not caused them, but it's kind of exacerbated the problem. And we expect as part of that to see continuing cost-cutting programs. And I think supervisors are going to be particularly vigilant to ensure that cuts don't fall disproportionately on risks and control functions. The second element to this topic in terms of following up on COVID-19 is conduct, culture and governance. Amongst other things, the events of the past 10 months have been a stress test of firms' cultures, and we expect to see supervisors continue their scrutiny of firms' cultures for evidence that they are delivering good customer outcomes, including for small corporates, customers, and particularly for vulnerable customers. And here we see a possible tension between conduct and prudential obligations, between doing the right thing for customers, which in many cases will require patience, thorough consideration of an individual's circumstances, and gathering additional information. And on the other hand, the expectation from prudential supervisors that firms are quick off the mark in terms of recognising credit impairments and avoiding the build-up of NPLs. I think it's quite clear the two need not conflict, but it's possible that they may do. And we think this is going to be a real area of focus and require a lot of thought from firms, especially as some of the support schemes start to roll off. And then the third element of this that we call out in the report is financial crime in the new normal. Especially in the Nordics, financial crime is not a new topic. And the areas of concern that all firms have been working on over the past few years have not gone away. But COVID-19 has exacerbated some of the risks. And we see in particular two main areas of supervisory focus. First is control and surveillance over staff, especially traders, in relation to market misconduct and abuse, where they have to work remotely. Outside the office or the dealing room environment, staff are of course subject to fewer checks and balances. This is a real concern of market regulators and also of ESMA. Nordic regulators have warned of the increased opportunity for financial crime given the remote working environment too. But I think in a way, going back to the point I made a few moments ago about stress testing culture, in some respects, if you define culture as what someone does when no one's looking, when no one else is in the room, the working environment, working remotely, is the ultimate test of culture. And we think that is the perspective that supervisors will have. And the second area to this in terms of financial crime is fraud in all its guises. Retail scams offering the prospect of higher returns, especially in a low interest rate environment, phishing and the like, because of the much higher adoption of online services, and fraudulent loan applications under government support schemes. So within this topic of COVID-19, even as we move on beyond the immediate pandemic and hopefully into a recovery from a kind of a clinical and economic perspective, there are a whole host of issues that regulators need to think about. If we move on to the second topic, addressing the expectations of society, and it won't surprise you that sustainability is at the top of this list. Regulators, supervisors see a real opportunity for financial services to play a leading part, catalysing the transition to a lower carbon economy. And that opportunity then is translating into a real drive by the official sector to get financial services firms to take on board various initiatives to push climate change and sustainability. And because of that, we saw very little let-up in terms of regulatory activity on sustainability in 2020. Even as on other initiatives, regulators were pausing work plans or revising their aspirations because of the pandemic. And some supervisors, in fact, have been quite clear that their expectations of what firms will be able to deal with or to deliver has actually risen because of the extra time that they've had to prepare. In 2021, we expect to see continuing focus by supervisors on climate risk management. This will be incorporated increasingly into Pillar 2 through the ICAP for banks and through the ORSA for insurers. And just before Christmas, we saw a consultation paper from the European Banking Authority on exactly this issue of incorporating climate risk, or ESG, into the SREP. In contrast, when it comes to Pillar 1 capital, we don't expect to see much progress in terms of introducing incentives for green finance or penalising factors for brown investments into the Pillar 1 capital framework. So what that means is that there's no explicit capital charge related to green or brown factors, but an indirect potential impact on capital because of the additional credit risk, market risk, liquidity risk that climate risk is driving. We also anticipate a continuing focus on sustainability data, both for financial risk management and for disclosure purposes. I mean, this actually is the real elephant in the room. Data is a significant, or the absence of data is a significant problem in terms of moving forward on aspirations for sustainability. And it's a problem that industry really needs to tackle in the year ahead. And we think Nordic regulators are also going to be particularly focused on ESG disclosure. And Sweden, for example, has already called out greenwashing as a particular area of concern. If you've not come across the term before, greenwashing refers to where investments which are not really green or not as green as they purport to be, are nonetheless marketed as that. And then the second element, this in terms of society, is culture. And I mentioned on the previous slide in relation to COVID-19 that regulators are going to pay increasing attention to firms' treatment of customers in financial distress as the effects of the pandemic linger. But another aspect of this is diversity and inclusion, which of course we've seen rise rapidly up the agenda in 2020 through social movements. Regulators, as a result, are reinforcing commitments to diversity and inclusion as a means of improving governance, culture, and practical decision-making in financial services. The third topic I wanted to touch on is dealing with technological innovation. And again, you'll recognise that this is an issue that's right at the centre of what's happening in society. It's not just an issue that banks and other financial services firms are dealing with. Whichever way you look at it, the experience of the pandemic, though, has massively accelerated customers' use of digital channels for engaging with FS. And we, and I think supervisors too, expect these habits to stay, which raises all sorts of issues, including, for example, preserving access to cash for those who need it, which I know is already a topic that's been actively debated in the Nordics. Firms will need to revisit business critical cloud migration plans, for example, which were completed at pace during the pandemic, to make sure that all the necessary controls are in place. And this is particularly important given the level of supervisory scrutiny that outsourcing more generally is under, particularly when the outsourcing is to a third-party provider, such as a cloud service provider. And unsurprisingly, there's also a particular focus on digital payments, including payment firms and e-money providers. Firms safeguarding customer funds, business continuity, solvent wind down plans, and the management and outsourcing risks are also all in the spotlight. And on operational resilience, just as the financial services sector has so far evidenced its financial resilience, it's also shown itself to be operationally resilient, coping well with the extremely rapid shift to remote working at the start of the pandemic, and taking most things in its stride. It's important to recognise this as a major achievement, and my conversations with supervisors suggest that they think this too. But that said, we don't think firms should rest on their laurels, and even if they were inclined to, I don't think supervisors would allow them that luxury. Supervisors will, in our view, expect firms to prepare for shocks that are fast, short-lived and idiosyncratic. And although COVID-19 may have been fast, it certainly wasn't short-lived or idiosyncratic. So lots to think about. I'll end my remarks there, but I really look forward to this discussion. Tom, back to you.
Thank you, Simon. That was an excellent overview of the range of challenges that regulators are going to be posting to financial services firms for the next year. I'm going to start with the reflections on COVID-19, and before I pass on to bring in some of our other panel members, I noticed that one of the first topics was credit risk. And credit risk is very close to my heart. It's something I've worked with for around 20 years. And COVID-19 has created some of the biggest challenges that I've seen in my professional career in this space. Looking forwards is always a key part of credit risk and credit risk management, and it is increasingly difficult to when the times are uncertain. Whether that's measuring credit risk through the impairments, whether it's trying to establish who are the good customers and who are the bad customers. And COVID-19 has really created some uncertainties for firms, whether that's banks, whether it's insurers or asset managers, anyone who's got credit risk on their portfolio. I think the next stage is truly untested, but I think the focus really is going to have to be working in this new normal. COVID-19 is not going to go away. We have this second round of spike of infections, which is going to affect the real economy, and the effects on the real economy are going to be multiple years to come. I think it's going to be really interesting to see how banks and insurers provision for IFRS 9, for provision for COVID-19 under IFRS 9. For banks, this is the first time that they've really been tested since IFRS 9 went live in 2018. And we expect and anticipate that some of the new stresses on the relatively new solutions and systems will be challenged. Whether that's the data or the models or the role of management in making judgments, those are all going to be put under pressure and will need some form of transformation to remain compliant. And for insurers, well, it's still to come, and as the rollout has been aligned to IFRS 17. So designing and implementing something new in a period of stress is an extra layer of complexity and challenge that I think firms will be ready to face up to, but will need to face up to. The thing we'll be looking for in 2021 is some of those credit losses coming through in real terms. Increased non-performing loans, increased customers struggling, and increased volumes of bad debt, which will create real challenges for the sector and for the ongoing resilience and business resilience of many firms. With that in mind, I'm going to bring in Elizabeth Verneman. Hi, Elizabeth. Hi, everyone.
Hello, Tom. Can you hear me?
Yes, I can. So, Elizabeth, from your perspective and your experience, what do you think the impacts of COVID-19 are going to be? And how do you think it's going to impact maybe the viability of those business models with our clients?
Well, it's a very, very big question, and we wouldn't be Deloitte unless we actually had a full-on business outlook that goes into details on the answers of that as well. But I think that from where I'm standing, when I look at the impacts of the way of working at the banks and the insurers and also the investment managers, many of the impacts are actually happening kind of behind the scenes. As a consequence of finding new ways of working, consequences of flattening the ways of making decisions and not having the same structure that you once had within your safe environment at the bank or the insurance company. You have to find new ways of working. And there we can see quite a lot of discussions ongoing, for example, on the core infrastructure, moving more from your own environment to cloud. I'm not saying COVID is the reason, but it's an accelerator. That will also enable agile development in a more agile way than when you actually work in your old environment, because there's so many dependencies that it's hard to work agile in a proper way. I think that will eventually lead to innovation, especially if the firms within all these areas, insurers, banks, and investment firms, are good at capturing and analyzing data. That will be the enabler for actually changing the business models going into how they serve their customers. So, of course, right now, you can see an increase in phone banking, a product that was nearly dead a year ago. But in the longer run, if they transform and use this opportunity to strengthen the data quality and the data capture, they can actually do proper innovation for the future.
Thanks, Elizabeth. I mean, it's interesting you refer to it as an opportunity, and that's definitely how a lot of my clients have seen it. Have you seen any examples where COVID-19 and the impacts have actually led to actual transformation or the start of it already?
Yes, I have. I think that you can see it in two layers. One is the sort of back office infrastructure work, the way of communicating, and that is not necessarily seen by the customer, but it impacts the performance. I think that one of the key drivers there are the very big houses within investment management that have completely changed their way of communicating with sub-custodians and others around the world, hence impacting and putting pressure on Swedish investment managers to change their way of working. But I mean, in insurance, you could have a COVID insurance. And I think that in particular, when it comes to cyber insurance, it's putting the pressure on really finding a way of measuring the risks there, because it's become much more mainstream to subject yourself to cyber risks.
It's really interesting actually to understand how firms are starting to seize these opportunities.
Otherwise, I guess that the final thing there is the payments industry, given the way of just doing business, is greatly impacted, and there's a lot of consolidation and newcomers and a lot of stuff going on there.
Yeah, that leads quite nicely on to my last question. You know, with newcomers in the payments industry, I also noticed that there's an increase in the Nordics in the financing companies, and with non-performing loans expected to rise. What are you seeing in that space?
From a personal perspective, I always worry when non-performing loans are being captured in some sort of product, because I was around in 2008 when there were quite a few products like that, and it didn't end well. Mm-hmm. And I think that the regulator is looking into that. There was a communication paper that came out in late December. Hopefully all of you went to vacation earlier than that, but that deals with the expectation from the regulator, from a European perspective, if you're going to securitize products of non-performing loans, what would they want to see to ensure that subprime is not becoming the new COVID disaster?
Yeah, I don't think we'd want subprime to become the new norm post-COVID. But there is definitely a risk of increased credit risk, and we definitely need to think about those customers. Let's turn to the customer angle, and maybe that's a good chance to bring in Hinko. Thank you, Elizabeth.
Thank you.
Hinko, I know that you've done a lot of work in the past with banks and other firms in terms of how to protect customers and manage the risk of customers not being treated fairly and equally. How have you seen that evolve through the COVID-19 lens?
Yes, thank you, Tom, for having me in the panel as well, and thank you for your question. Yeah, I've seen both with banks and also with insurance. Actually, quite some issues in the conduct area. So sometimes we forget, as a firm, serving our customers, that in particular in the COVID situation, first instance, we were stressed due to the fact that the credit risk exposures were, of course, increasing. But at the end, our customers, in particular the retail customers and the small, medium enterprises, were under severe pressure as well. I think in many countries, including in the Nordics, the government was very helpful in giving subsidies in particular to the small, medium enterprises, but sometimes to retail customers as well, to at least give them some flexibility in their current financial position. But also, a lot is being expected from both from banks as well as from insurance to be very helpful, in particular in these difficult times, as we are still in and will remain in the new year. And that's what Simon said as well. Therefore, I think the cultural element within in the financial service industry is even of more importance than it already was. A lot of firms actually implemented a new way of working, the so-called agile way of working, which on itself was very helpful to make, I think, financial institutes much more innovative than they were in the past. But it is also quite important from a diversity and inclusiveness point of view that both banks and insurance and asset management companies invest in making the necessary changes within the culture. Because I strongly believe, and that's what I see also in serving my clients, what I see on a day-to-day basis, that will have a positive impact on the behavior to customers. Of course, in itself, it's quite obvious that financial institutes do live from the services from the customers, but due to the current COVID situation, they are quite vulnerable, and therefore it's even more important that the financial institutes are helping, in particular, those vulnerable clients. Because we always see after the COVID situation that there is much potential both for SME companies, but as well for retail customers, which is still an important business line within most of the banks and insurance companies. So that's, I think, the most important point of view, I think, from a customer point of view.
Yeah, thanks, Hinko. And I think it's always important to bear customers in mind. I mean, I know it's the focus for us. We always think about our clients first, and I know that's also true for our clients. But also, I noted that that in Simon's presentation, he said that regulators will expect risk and compliance functions not to be slimmed down too much, and the risks and controls to be, maintained and strengthened. What scope is there for, helping customers without prejudice, making the resilience and probably the right word, viability of the bank, the business model, putting that at risk?
Yeah, it's quite important as well for risk and compliance functions, and they fulfill quite an important role within the financial institutes to really challenge the business, because there is a severe pressure on reducing costs. Maybe we didn't highlight that angle enough, but before the COVID situation, the performance of most financial institutes was under severe pressure anyway, and there was quite some pressure as well from the regulators to strengthen the capital position, but also to reduce costs. And for obvious reasons, and at the end, it could be also in the advantage not only for the shareholders, but even for the customers as well. It's quite important that a financial institute becomes more agile, but also become more efficient. But contradictory to that development is sometimes we forget and we see it already with sustainability, that reputation is actually the most important objective we need to achieve. And let's not forget that, particularly in a crisis situation now with COVID, we sometimes forget the long-term perspective and that we will survive at the end, and we will come out of this crisis even more strongly than we were already. But in a crisis, the national response quite often is to be even more focused on cost reduction. And then we could forget what negative impact that might give to our clients, to our customers. And I strongly believe that in particular risk management and compliance could fulfill quite an important role in challenging the business and to bringing the lens and the perspective again that we always need to strive to achieving a long-term objective. And it's not only that we are here on Earth to achieve a better performance, in particular to achieve a better financial performance.
Yeah, thanks, Hinko. I think that's there's wise words, and I like the positive outlook that you bring there. And I completely agree that risk and compliance is very much part of the solution to addressing the regulatory challenges, but also the more macro societal challenges that were brought with COVID-19. Thank you, Hinko. I'm going to move on now to the looking at how we can support society and how firms should be supporting society. One of the things that was mentioned by Simon and Hinko was the importance of sustainability in the long run, and building a financial services sector that can deliver sustainable finance and support clients who are really the world that is trying to face into climate change practically and with providing the support that's needed as we transition to that lower carbon economy. I'm going to invite Gareth. Hi, Gareth. Are you there?
Can you hear me, Tom?
Yes, I can. Hi, Gareth.
Good morning.
So, Simon sketched out some of his remarks on sort of the emerging agenda that we have regarding sustainable finance and climate change. Could you, based on what you've seen in the Nordics and around Europe, what do you think the priorities for firms this year are going to be?
So I think Simon gave us, I guess, a snapshot of what's coming up in this space, and it's I think to say that this is a very fast-moving subject, and it's an area where the supervisors have got a very ambitious agenda over the next 12 months. It's almost an alphabet soup of all the changes that are coming through when we look at TCFD, NGFS, SFDR, and I can go on. But I think what's really interesting when we talk about ESG and sustainability, in that actually a lot of the effort here is not a regulatory timeline exclusively. So yes, we have a lot of milestones to hit, but actually it's the activity of the consumers, of the clients, of society at large, which is going to drive a lot of this change. Now, if you give a real example of that, we see examples of large global banks, making very positive commitments to be net zero when it comes to carbon emissions. However, they are still coming under extreme shareholder pressure for their business activities in particular sectors. And they're being pressed not only by their regulators, but by their clients to be more transparent on the types of business they're doing, what their plans are to move to a greener economy. So it's not just a regulatory issue, it's a society issue. Now, I think so back to your question, Tom, of what does that mean for us in the Nordics? I think the whole concept of sustainability and ESG is quite fundamental to our region. So I think for all the financial services institutions that are operating, I've seen quite a lot of, a lot of activity in this space in the last 12 months. I think you say what's coming up. To me, this is the year where we really we become very clear on purpose. So as financial services, what is our purpose when it comes to sustainability? And I've seen lots of examples of that already, but I think this is the year when we begin to see that strategic element becoming far more concrete and crisp and flowing down into the rest of the organization.
Yeah, thanks, Gareth. It's a really good point, and I think understanding that purpose and sharing it within organisations is going to be key. If you're making it a bit more practical, though, where should firms start, particularly if the art of the possible is still evolving?
So I think what I would say on that one is it's walk before you run. And start at the top. I think it's very, very important right now that, again, the organizations are very clear on their strategy and purpose when it comes to ESG. But then this is not something that lives purely in risk or in communications or in strategy. This actually affects the full organization. So I think that very, very first step is if you plan to make commitments to be net zero, it's to then understand what is the implication of that across each of the functions of the organization, and ensure that all those functions are in place. I've spoken to a lot of clients, and the sustainability committee or the ESG committee is becoming a very common and powerful process or organization within the business, a way to pull everybody together to get the level of engagement. I think another point that I'd want to kind of pick up on this one is when we work in, I guess my background is very much risk, and when we get into the risk space, this is going to be an important year for us in risk when it comes to ESG. This is all about making sure our risk strategy aligns to the corporate strategy, making sure that our risk appetite statements reflect and are fit for purpose to deliver this strategy. Now, for some organizations, that may be adding very specific ESG factors to risk appetite statements. Now, I think the natural progression for this is we will get to the point, and this is where regulators are now focusing more, is actually on measuring the ESG impacts at origination and on an ongoing basis. Now, the one we can talk for an hour on that easily without getting into the details. But the point I just want to make on that one, and Simon touched on it, is data. So there are challenges with the data, and it is a moving target. So this is more about beginning qualitative and going quantitative where you can. So it's all about being realistic and building this up over time. This is a gradual process.
Thank you, Gareth. I think, in summary, what you're saying is get your strategy right with the right governance, bring people together, and then start collecting that data so you can actually do something with it. And that's what I see, actually. Is that a fair summary?
No, absolutely. And I'm going to blatantly copy one of our esteemed colleagues in the space, Mark Carney. When he talks about ESG and financial services, he talks about reporting, risk, and returns. And those three pillars, I think, are very good cornerstones to build the implementation plans out of over the next 12 months.
Yeah, no, I completely agree. No, thank you, Gareth. That's excellent. I'm conscious of time, so I'm going to move on to our third topic and bring in Sverre Danielsen. Hi, Sverre, can you hear me in Norway?
I can hear you fine. Good morning.
Good morning. We can hear you too. So, one of the third topic was dealing with technical innovation. And that's going to be really important as we move to a low carbon economy, but also it's an ongoing theme. When we spoke about COVID-19, but we've also talked about some of the other broader trends, and Simon touched on them. He mentioned technical innovation, some of the challenges that'll bring. What are you seeing in your day-to-day interactions with senior management teams?
Yeah, so thank you for that, Tom. I would say that we look into the Nordics pre the pandemic, we must remember that the Nordics was already relatively more digitized than many countries in Europe, like heading into the pandemic. And as such, I would say that we didn't panic, and neither did the Nordic regulators. That said, I would also say that, in a sense, the pandemic did turbocharge digital adoption across forms and demographic segments, especially on the front-end platforms. And we did see a lot of positives and some surprising elements coming into the pandemic as well. On one positive note, we actually saw when the world started to go into a lockdown, we saw banks moving parts of their offshore operations back onshore in a surprisingly swift manner. We also saw insurance companies that had focused on a very, I would say, customer-centric or business service-driven scenario modeling way before the pandemic. They reported to come out strong and even stronger than expected in the pandemic in light of operational resilience. So I think one question that still remains coming in from a regulatory angle is all these efforts across the Nordics that we see during the pandemic a result of a regulatory pressure, or is it basically a result of the competitive pressure to transition more into digitally enabled business models to stay in the competition? And I would say it's the latter more than the regulatory pressure we do see in the Nordics these days. This may be changing in the near future, though, I must admit. We see signs that the Nordic regulators are moving into the space, looking into how we deal with digital transformation and how it affects operational resilience in general. So I think a relevant question from all of us to asking, for all our listeners as well, is: are we truly prepared to manage the exposure of those new back-end and front-end systems in regards to both technology risk and, I would say, cyber risks? So when we have these dialogues with you on the call and financial services firms across the Nordics, they basically say that regulatory expectations are slightly unclear in this area. What is expected to pick up on the operational resilience as a result of the digital transformation? So I would say that what we are seeing and what is reported back is that the regulators are starting to ask questions on both value change, on how the inclusions of new actors that take place in a sufficiently safe framework, and especially considering the risk for the consumers. Tailing back to what I refer to as more customer-centric scenario modeling. We also see especially the Finnish and Danish FSA being quite clear in their strategy that they are looking into international regulation on technology risk, as the EU DORA that some of you may be familiar with. That's at least one set of regulations you would like to look into in the coming months and coming year. And that's just to secure, safeguard, and promote well-functioning business models that cater for technology risks. So, in short, what we do see in this space is that the question still remains: how we really kept up to speed on our work on operational resilience, while we see this rapid adoption of new digital technologies coming into play in the Nordics.
Yeah, thanks, Sverre. I think that's really it's really insightful there. You know, the Nordics well positioned with digitization, but the regulators starting to take more attention to it. And actually, I think if I was a regulator, I would be a little bit nervous if there's been turbocharged agile delivery and maybe not some of the risks. So maybe not some of the controls that you might have if you took a bit more time to deliver. if you were to go into a firm, what would be the top couple of things you might be looking for as potential issues?
I would say the overall strategy. I think overall strategy on digital, a planned digital strategy. We do see in light of the regulatory requirements that some companies are slightly trigger happy when it comes to resolving these compliance gaps. What I mean by that, we see some unfortunate fragmented approaches when it comes to trying to close these regulatory gaps. And that's, I would say for all of us, some of these huge regulatory requirements like AML, GDPR, I would also say the transition into IBA, it's not siloed approaches that would solve these questions and these regulatory requirements. So what we would like to challenge, I would say, all listeners, but also our closest mind, is to look into and ask yourself, are the right people, the right business units, the right business services included in the way we actually approach this? And could we have some bedrock components that are common across our business units and our core business areas? Because at this time, we see people actually running off with 4 or 5 different operating models on the same regulatory requirements across some companies. And of course, that will become messy, especially if you then chase 4 or 5 different solutions, technical solutions, also to solve issues in that space. So it's, I would say, try to look into a slightly fragmented approach and see if we could do a more unified and top-down approach, especially on the operating target with these regulatory change programs.
Yeah, that's again very sensible. Very sensible. Thank you, Sverre. I'm gonna move to Carla. And Carla, I know you've worked on a number of projects where you've had to rely on data and technology and digitization to deliver. When you've been working on those projects in Finland and beyond, how have you taken some of these regulatory perspectives and requirements into consideration? Are you there, Carla?
I'm here. Thank you.
Hi, Carla.
For the opportunity to join the panel. Can you hear me well?
Yes, very good.
Yeah, so I guess Sverre brought a lot of the kind of our main points of view already. But maybe reflecting back on in a practical sense, looking at the projects that and the development in the past five years or so. So I think it's very much so that a few years ago, pre-pandemic, we had a lot of sort of separate regulatory programs, separate digital programs, moving into agile, and now we're living in interesting times in a sense that all of this is coming together, and we are learning new ways of working, delivering regulatory programs in an agile way and incorporating data and analytics into these programs. So new techniques are being applied more and more, and of course the regulator is also keen to see that these are applied in a responsible manner, and that's what we see also in Finland. The Finnish FSA has prioritized digitalization as one of their main themes.
Yeah. No, thanks, Carla. One of the challenges is, of course, bringing these regulations together. So there's been a lot of we talked a little bit about the challenges financial crime has created for the Nordics, and I know you've worked on projects to enhance the use of data and technology to address financial crime. How do you think firms can deploy technology solutions to really address AML challenges whilst not creating new risks?
Well, I think technology and analytics is more and more part of all the projects our clients are having and all the changes. When it comes to AML space, it's very much a regulatory space, regulatory programs, and in that context, it's good to find those techniques, find the ways to deliver in a responsible way. Another aspect I would like to highlight in terms of kind of what is happening, especially in the AML space, is increased use of data. Data in terms of kind of data-driven risk assessment, so that we see how the AML risks are evolving over time, and then looking a bit broader, not just within the institutions, but kind of as an industry as a whole, we see more and more interest of sharing the data in the industry. Some good examples in Netherlands. There's the Transaction Monitoring Netherlands, that is where data is being shared, but in a responsible manner. And this has raised interest in the Nordics as well. I think in all the Nordic countries there's discussions on this, on how to share data more extensively to combat financial crime. So I think in the Nordics we are all in all very well prepared for this kind of digital adoption. We have been working on digital strategies for quite some time already, and AML concerns are nothing new. So now it's more like in the years to come, these are coming closer and closer together, and we see more efficient and effective solutions. That's my vision.
Well, thanks, Carla. It's a good vision and absolutely aligned to what we've seen. I'm going to flip back to Elizabeth very quickly while we're on the topic of financial crime. Elizabeth, I hope you're still with us. So, Carla raised some interesting points there, and an example from the Netherlands in terms of how some communities are addressing financial crime. What are you seeing in the Nordics with our clients, and how are they going to cope with the increased pressures on AML, both driven by COVID, but also the increased regulation?
Well, interestingly enough, there's actually been a press release this morning about the increased cooperation between, or rather the formalized cooperation now going from a project to a more ongoing state, where the largest banks in Sweden will work together with the police. If you look at the example from the Netherlands, I think that it would be wonderful if we could implement that straight off, also in Sweden or even in the Nordics or even on a European level. But there are quite a few regulations and laws that are conflicting. So what you have here is that you have the concept of integrity that is on one side, and then you have the concept of crime fighting on the other. And there will always be a tug of war between these concepts. So you had a second question as well. I got all excited about the press release, so maybe I lost that one.
What have you seen in terms of how those banks are coming together and how firms are coming together to address AML in the context of COVID-19?
Well, in the context of COVID-19, I don't necessarily see that has impacted a lot. For the financial crime. What we do see is an increased interest from the specific institutions on fraud. But that also relates not solely to the big players, but also the small players with a lot of consumer loans. And I think one kind of fun fact that some of you might be interested in is Klarna has launched a podcast about crimes and fraud. Not necessarily, as far as I understand, within Klarna, but rather, to sort of raise awareness. And crime pods are a hot topic. So I think that is one sort of innovative way of communicating about this topic.
I'll have to keep an eye out for a crime pod. That's definitely interesting and something for the commute maybe. I'm going to quickly we've got about 3 or 4 minutes left, and we've had a couple of questions from the audience. So I'm just going to quickly flip to Sverre. One of the questions is, what are you seeing, bringing some of these things together in terms of the role of compliance functions in having to address some of the ESG and climate risk challenges that are coming on? So what's the role of compliance going to be with sustainable finance?
Yeah, thank you for that. I think when it comes to the compliance function, I must admit that you probably recognize this on the call as well, that in my view, the compliance function is not always functioning as well as intended. And the reason for that is that they tend to be, in some cases, described and observed being more of the internal police than actually being a strategic advisor to the first line of business. And I think that's something that immediately needs to change, the very role and perception of compliance in bringing these kind of regulatory requirements across the company and actually build the capacity and actually work as a strategic advisor. I think one of my colleagues actually said that we need to change the compliance function from people saying no to one saying yes, and this is how. and I admit and I realize that that's quite a challenging task, also for the compliance function, balancing this act. But I think the first thing we need to do in an ESG and sustainability finance is that recognition that they need to actually stay in the same side. It's a co-working effort to do this right. And what we see from the project in sustainable finance, sustainable finance is not an office in the 4th floor. It's basically hits every single piece of processes in your company. And I think the quicker we understand that, the sooner compliance is able to enact as a strategic advisor in that space, I think the better we are off in solving these issues.
Thank you, Sverre. I think we've got time for one very last question. Gareth, you've got a minute to talk about the new EU taxonomy, and how do you think that will affect how large investors really go about implementing sustainable investments, even within some of the more riskier sectors like SMEs?
So I think the new taxonomy plus some of the other regulations that support it, this is all beneficial. So when it actually comes to understanding from a corporate level, understanding what's green and what's not green, how that then flows into let's say into the financial sector, for investment firms to be able to make better decisions on where they allocate capital, for banks to be able to make clearer decisions on where they allocate capital. This level of disclosure and reporting is only beneficial. Now I think there will be a little bit of time, and we need to work through some of the challenges on interpretation. But if you look at the situation we're in today, where the volume of corporates that are publishing detailed information on ESG it's relatively low. So the taxonomy and the supporting regulation that goes with it, that's only going to be beneficial in the long term.
Brilliant. Thank you, Gareth. I know that was quite a detailed question to end with. Look, just a few personal reflections on sort of where we might be in 12 months' time. Hopefully we'll be back here talking about the 2022 outlook, as this is our annual publication from our Centre for Reg Strategy. And hopefully in 12 months' time, we will have faced into this new regulatory agenda and have some more certainty around it. I think that's where firms will be, and certainly where we'll be working. Hopefully we'll be back in the office, but maybe a bit less than before. And I think certainly in 12 months' time, some of those financial pressures that we've reflected on during today's session will start to come through. 2021, though, is the year to recover. It's the year to respond to the crisis and rebuild for the future. I'd like to thank all of our panel members and Simon for the presentation and contribution. And I'd like to thank all of you for joining us. We'll provide details via email later, and I hope you have a wonderful day. Thank you very much.